And thank you, John, for inviting Fitch to this event. I'm not sure if this is the first time, but we are very pleased to participate here in Cyprus. And also thanks to the audience for joining this session. I listened to part of the previous session and as well my colleagues, so probably some of my keynotes will refer to some of the comments, but I will try to give the angle from a rating agency perspective. So basically, let me share with you three key headline messages and a concluding remark. I will focus on Southern European banks where I built my experience in the past years. And in particular, I will also focus on Cypriot banks, on our view on Cypriot banks. So on my first message, I would like to convey and share with you is how Southern Eastern European banks enter the crisis. I think certainly the coronavirus crisis has posed challenges for all European banks with no exception. And we have highlighted this by taking broad negative rating actions across Europe, particularly in terms of outlook revisions to negative outlooks, but also a few downgrades. In particular, in Southern Europe, we have the vast majority of banks on negative outlook, but we also took some downgrades, especially in Italy after the downgrade of the sovereign rating. And then we also downgraded 3 banks in Spain, 1 in Portugal, and 1 in Cyprus, just after the outbreak of the coronavirus crisis. And we also kept most of them on negative outlook and just a few on stable outlook. This is just to give you a sense that really the coronavirus crisis has affected all banking systems in Europe, so of course to different degrees, but clearly there are downside risks coming in. Now, as I said, when it comes to Southern European banks, the starting point is different even within the banks in this region. Particularly if we look at Spain entered the crisis after having reduced significantly the stock of impaired loans after the real estate crisis in 2011 and 2013. And this, of course, translated into improved capital levels, particularly capital encumbrance to unreserved problem loans, because when you look at the capital ratios, it is true that Spanish banks typically operate at the low end of European standards. Then we have Italy and Portugal following suit, albeit lagging behind Spanish peers, with sector impaired loan ratios standing between 7.6% in the case of Italy and just below 6% in the case of Portugal. And again, in recent years, we've seen banks accelerating the de-risking process, and this has been translating into improved capitalization as well. Now, lastly, when it comes to Greek and Cypriot banks, and I think this has been commented before, the starting point for these banks is of a weakness in terms of asset quality because their impaired loan ratios are significantly high compared to the European average. In the case of the Greek banks, the sector impaired loan ratio stands at 37%, whereas in the case of the Cypriot banks, this is around 22%. This places the Greek and Cypriot banks in a vulnerable position in their de-risking strategies, which they started in the past few years and actually were evolving well. But of course, the pandemic has sort of suspended this process. Now, the positive news, though, is that in the second part of the year, we've seen some significant deals in Greece and in Cyprus relating to asset disposal, suggesting that there seems to be some investors' appetite for Greek and Cypriot distressed assets. Nevertheless, and I think, and I agree with some of the comments made before by some speakers, is that banks need to continue in this process of de-risking despite the more difficult operating environment. It's needed, and also this ultimately will translate into greater resources, capital relief to be able to on-lend to the economy and therefore to support the recovery. So this is sort of the first message, how the banks enter the crisis. So in my second message, I would like to share what should be watching, what should we be watching going forward. I think, and we've commented, I mean, the vaccine and progress in getting a reliable vaccine clearly can dramatically change the macroeconomic prospects and therefore banks' future performance. But in our opinion, there remain still significant downside risks. So what should we be watching? First, I mean, whether the recovery is softer and longer, either because the second wave of contagion gets extended. Now we are experiencing this unfortunate situation in many European countries. So we need to see what consequences derive from this, both on the economy, but also on the potential asset quality issues. Or either because the agents' behavior patterns change. And I'm sure, I mean, we can speak about how digitalization can change these patterns. Now, the second point we should be watching is, all Southern European countries are net recipients of the EU Recovery Fund. But the timing of these funds and the allocation are key for the recovery. So it's something we should be watching. And thirdly, we should be watching, especially in Southern European countries, what are the effects of the removal of the different support mechanisms, both from the government or either private support schemes, especially because these economies, to different degrees, have made large use of these support schemes. For example, Portugal, Greece, and Cyprus in particular have used the loan moratoria quite significantly. For example, Portugal, the percentage of loan moratoria accounts for 20% of loans, whereas in Greece, it's the same figure, but in relation to performing loans. And in Cyprus, this figure increases to a roughly 0.5% of the performing loans. It's worth saying, though, that the criteria for the application in Cyprus were practically non-existent, and probably this explains why the usage has been much higher. Just to give you some reference, in the case of Italy, the loan moratoria was about 18% of loans, whereas in Spain we have a dual system where the loan moratoria, strictly speaking, was 8% of total loans, but then you have a pack of state guarantees that if you add up, you come up with a similar amount of, let's say, support usage than Italy. So we need to keep an eye on what happens after the removal of the moratoria. So ending with the, yeah.
Are you finishing?
Yes.
Yeah, very good.
So lastly, and just to finish with our views on the Cypriot banking sector, just to give our views on the recent actions, we just after the coronavirus crisis, we downgraded Hellenic Bank to B, and we revised the outlook of Bancos Cyprus to B minus, to negative. Both remain on negative outlook, and basically the ratings highlight asset quality weaknesses, constraints in generated capital internally, capital encumbrance to unreserved problem assets being very high, and therefore, in order to assess our outlook in the coming, say, 12 to 18 months, a key priority for us will be how they tackle the asset quality issues in combination, how they relieve pressure on capital. And one final remark is, and I think it's been commented by some of the speakers, how important digitalization can be to remain competitive in future.